All right, welcome to the weekly prep video for the week of February 9th to the 13th. In today's video, I'll be going over the action of the past week of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into next week, like I do with every weekly prep video. So if you guys enjoy it, please leave a like and subscribe to the channel. If you want my market takes throughout the trading day, along with a live stream at the open, and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Let's start off with the indexes. Friday, finally, we had a snapback rally. NASDAQ up 2.1%, still closing under the 5-day moving average, still closing under the year-to-date start, along with the 10, 20, and 50-day. But it at least is a start from an oversold bounce. Going to the 65-minute chart, you can see after hours on Thursday, very, very disgusting day in the market, especially with growth stocks. Thursday after hours, we even undercut that support gap and then eventually had a nice rally. So it's a start. It's an oversold bounce. But let's get over the 10 and 20 before we get too excited here. S&P 500, on the other hand, very strong. Also lost the 50-day moving average on Thursday, followed by a gap up, reclaimed the 50, 5, 10, 20, all the key moving averages, and then closed well. Only down 0.2% for the week, and that really shows the divergence between the growth stocks in the market and basically everything else. Money is rotating from risk on into risk off sectors. IWO, the growth stocks of the Russell 2000, also had a nice day on Friday. Pretty ugly action Wednesday and Thursday, back under the 50-day, but that gap up reclaimed all the key moving averages, and right at that 2021 February high breakout point. So we broke out of that earlier this year, immediately reversed at that level. Now we're right back to it. Hopefully this is just a breakout recheck, and then we can get going again. We'll see what next week brings, but this is still a lot of volatility, and the easiest markets to trade, the easy money, where the easy money is made, is when the NASDAQ, S&P 500, and IWO are over their 20-day EMAs. 20-day EMAs are in an uptrend, and the volatility on the indexes is not this wide and loose. ARKK, another kind of risk on, risk off indicator that I use. Above the 20-day EMA, usually risk on, below, risk off. We're still well below the 20, the 10, and the 5-day. We did have a nice snapback on Friday, up 6%, but we still have some air to even the 5-day EMA, and that really shows the type of destruction that the growth stocks over the last couple of weeks have seen. Then switching over so we could take a look at Bitcoin, we did finally get a bounce. Low of the pullback was $60,000, almost on the dot, $60,001. Nice reversal on Friday. Right now, as I'm filming this, kind of trading in the upper half of Friday's range, just under the 5-day EMA and under that 70K level. So it seems like that might be at least a local low, and then we can rally, hopefully build out a higher low and get this thing back in an uptrend. But at least for now, the volume on this flush, I tend to think that this is a short-term low. With Ethereum, similar action, right back to the 5-day moving average, back over that 2K level, still below the 10, the 20, the 50, 200, still obviously in a downtrend, but also had that pickup in volume into the flush Thursday afternoon before Friday's reversal candle. Getting into the liquid leaders next, let's sort this by price percent change this week. LITE up 41% this week. It's not all growth stocks that got hit. The optics names, incredibly strong. This one had earnings, I think it was Tuesday or Wednesday. Extremely strong action on Thursday, great relative strength, and then on Friday, up another 9.4%. I think it's not as liquid as a Google and Nvidia, that kind of stuff, but I would say that this is the leader of the market right now. GLW, another optics name, up 18.3%. Very clean price action all week long, up 8.3% on Friday. Had earnings the prior week and gapped up, 15.5%. And while there was a lot of volatility, the market was very choppy and downward pressing. We still never closed under the 5-day moving average. We had a 3-day pullback, a bounce. We undercut the 5-day plenty. We tested the 10-day, but we closed back over the 5-day every single time. And when a stock is doing that, especially a growth stock within the right group, you want to try and stay patient with it. The optics names look incredible. CIEN, let me just jump to that one, another optics name. closed back over the 5 to 10 day moving averages on Friday, up 7.8% for the week. WDC, a memory name, up 12.9% for the week. Had a little bit of volatility on Wednesday. Never took out Wednesday's low on Thursday, which any growth stock that did that is very impressive. Then on Friday, gap up, reclaim that 5-day moving average and 10-day on a closing basis, up 8.6%. And like I said, up 12.9% for the week. GEV, new addition to the leaders list. I kicked out BE. I think BE still looks fine. You could argue between the two, which you would have on your own leaders list. For me, I put GEV just because we had the nice reaction on earnings the prior week. Then we rallied up, had big distribution day on Wednesday, but we bounced right at the high volume close from that earnings. On Thursday morning, we actually pre-market was trading right around that level, got supported again. Nice action on Thursday after that gap down, and then the follow through Friday, almost a new all-time closing high. Really strong action out of GEV, up 7.3% for the week. Then SanDisk, we had that kind of gap up on earnings that got sold off. A lot of volatility Monday and Tuesday, followed by the first unfilled gap down. I got short this name on that gap down. Still have a short position on it, and it's closed. It's closed at the 5-day moving average, bounced the 10-day. So overall, I don't think this is doing anything wrong. I just saw the opportunity with the market starting to weaken. This name already extended, putting in that first gap down. Thought it was a good risk reward play and paid off. So we'll see what next week brings with that one, but up 3.8% for the week. ASML down 0.7% on the week, but back through the 5 to 10 day moving averages on Friday with a nice gap up. Opened near the low of the day, closed near the high of the day, up 4.7%. Google, all of the mega cap names, pretty weak. I would say NVIDIA with the Friday's action is holding up the best. Well, NVIDIA or Google, I would say, are the two best. Amazon had been showing some relative strength, got absolutely crushed on earnings. And then Apple, it seems like money kind of just rotated there to be safe. But Google, gap down on earnings, got bought up on Thursday, inside candle on Friday off that 50-day moving average. Something I'd watch for is an undercut and reclaim of Friday's low, that 50-day moving average, and the daily view app as a potential entry. I don't think it's on the long watch list, long setup. If it is, then I just repeated myself there. But down 4.4% for 4.5% for the week. And then MU, the weakest of the memory stocks, down 4.9% for the week, closed under the 5 and the 10-day moving averages, even with strong Thursday and Friday. On that distribution day on Wednesday, where we saw the memory names kind of crack, we bounced right at the support gap. On Thursday, we held that support gap as well. So maybe a little rally into the declining or into the overhead gap zone. And then we'll see if that's going to be a lower high spot, or if we could just rip through there and get back to highs. Next up, we got the industry ETFs. Because it's the weekend prep video, we'll go through every single one and just spend more time on the important ones. IYT, new all-time closing highs, very strong action, just hovering over that 5-day EMA on a big pickup in volume. So really, really good to see there. TAN, the solar ETF, up 7.3%. ENPH had phenomenal earnings or phenomenal reaction to earnings last week. That helped out the solar group. I think it's the 4th largest holding in that ETF. 7.2% for the week, up 3.4% on Friday. Little ugly close gap up. And I mean, solar stocks have been one of the leading themes off that April 2024 lows. ITB, Home Builders ETF, there was some news that came out that caused volatility on Friday, right at that resistance gap, but still holding over the 5-day moving average. I love how we built out these kind of uglier, higher lows, first under the 200-day, then right at the 50-day. Another higher low, like into the 10-day, or maybe even the 20-day catches up. That would be a really nice risk reward spot. I think this is an emerging theme in the market and something that has been basing for about a year here. So we'll see if that can get going. IYZ, the telecommunications ETF, new all-time highs, just going straight up at this point. First test of the 5-day after new highs, bounced right at that level. Very strong close on Friday. XLP, the consumer staples, this going up, like It's a little concerning because it's such a risk-off indicator if money is flowing to this group versus like growth stocks. But at least money is not leaving the market altogether. It's a little bit hard for money to just like liquidate altogether, but still new all-time highs on Friday, up 5.3% for the week. And when consumer staples moves 5.3% in a given week, it's something to take note of. XLB basic materials up 4.5%, had a new closing high on Wednesday, pulled back on Thursday, and closed relatively well on Friday. XLE coming out of a multi-year base, just phenomenal price action, up 2% on Friday, up another 4.3%, and a new all-time closing high. Just continues to surf this 5-day with all these subtle gap ups. Really, really strong action out of XLE. XRT, another group that could be an emerging theme in the market, has these higher lows off the 50-day moving average. I really like to see that. And Thursday, we got that ugly close under the 50-day, followed by a gap up, open near the low, close near the high of the day, back through the key moving averages. The retail ETF could be something to keep an eye on, up 3.9% for the week. Gold miners up 3.4% this week. Nice little bounce on Friday, up 5.4%. Silver especially, but silver and gold both had flushes post-market on Thursday. Those snap back in a real big way, and maybe we'll see some follow-through going into next week. And after a higher low here, we could push through those levels. XME, metal and mining, up 5.9% on Friday, back through the 5, the 10, the 20-day moving average with that nice ugly close, gap up, open on the low, close on the high, up 3.2% for the week, and so far just kind of flagging out here. I still expect this to test the 50-day moving average before it like builds out this base, but for now, nice snapback. XLV, the healthcare ETF, nice reaction with the Eli Lilly earnings last week, and back over all the key moving averages. It is a little bit choppy, and I find some of these names hard to trade. But overall, the key moving averages, we're into this resistance gap. Maybe we could push that level going into next week. But it's another theme that's above key moving averages. XLF, the financial ETF. This is one that I feel probably the best about coming into the week. I always say that financials and semiconductors, if those two are acting well, then the market can continue to act well. If those are breaking down, it's going to be hard for the market to hold up. And we saw this like breakdown from the highs from XLF under the 20-day moving average, then under the 50-day. And at least last week, we saw money actually rotate back into financials. We kind of tested this 50-day moving average multiple times, had that ugly gap down on ugly close on Thursday, followed by the gap up, pressed into the 50-day again and this resistance gap. We are not out of the woods in my mind by any means, but if we can close over this resistance gap and over the 50-day moving average, this could just be like a longer term higher low for the financials, and then the market can continue to go higher. PEJ, leisure and entertainment, really nice recovery on Friday, up 2.5%. But still just under the 50-day moving average and that previous resistance gap. So we'll see how this kind of base builds out. ITA, aerospace and defense, really nice action on Friday, back through the 5, the 10, the 20-day, closed right at the high of the day, up 3.4% on Friday and up 0.67% for the week. Just another ETF back through those moving averages. Biotech ETF, also ugly close under the 50-day, kind of your first close under the 50-day since this trend started. When was the last close? May 30th of 2025 has been a super, super clean trend. So I still expect a lot of volatility here, but usually like close the first time you test the 50-day moving average is a good risk reward spot. The way like the volatility in the market, it makes it a little bit more tricky. But I will be watching for like a higher low to get built out here and then a recapture of the 50 as an entry. Then we get to the losers of the week. Semiconductor SMH down just 0.5%, and that's because it was so strong on Friday, up 5.4%. This is a kind of a good example of that first test of the 50-day moving average and usually a breakout retest. Really nice risk reward spot. Bounced there. held up okay on Thursday, even though it was down on the day, held that 50-day moving average again. And the second the market pressure gets relieved, semiconductors just pop right back through the 5, the 10, and the 20-day EMAs. So we've got financials right back at the 50-day, semiconductors back over the key moving averages, starting to give me a reason to be bullish again. ARKQ up 6% on Friday, still down 0.9% on the week under the 10 and the 20-day EMAs. This is the robotics ETF. Lots of volatility here. Let's bounce, build out a higher low, have that volatility compress, and then we could start trading that uptrend. XLY, consumer discretionary, big gap down on Friday, but we recovered it all and a little bit more, ending the day up 0.4%, still down 2.6% for the week. Cybersecurity down 2.8% for the week. Nice Friday, closing back at the 5-day, up 3.4%, but still plenty of work to be done there. KWEB, Chinese internet ETF, made new lows here and really kind of just falling out of favor. The Mexico ETF looks way, way better than the Chinese one at this point, so maybe I'll switch those out. UFO up 4.4% on Friday, still down 3.2% on the week, and still under the 5, the 10, the 20-day EMAs. Your Rocket Labs, PL, and what was the other one? ASTS, a lot of volatility and some weakness. Good days on Friday, but some weakness earlier on in that week. NLR, nuclear and uranium, big move up on Friday, up 5.5%. After the ugly close under the 50-day, followed by a gap up, reclaim that. Still just an immense amount of volatility, not an easy dollar environment. ARKG, the genomics ETF, ugly close gap up on Friday, still under the 5, the 10, the 20, and the 50-day moving average, down 5.4% for the week. FDN, Dow Jones Internet Fund, under the 5, the 10, the 20, the 50, and the 200. Nice little bounce on Friday, but so much damage in this blockchain ETF. This is kind of like data center and crypto related. So the crypto all week brought this way, way, way down. And then on Friday, we saw the data centers really react well. APLD, I think, is maybe a potential leader in the market. Let me just go to that chart. I don't have it on the watch list just yet because I want to see the volatility contract, but up 25% on Friday, back through those key moving averages, still trying to build out this base a little bit. I don't think it's one that we want to take off our radar. It might not be ready just yet, but we'll see. The blockchain ETF still down 8% for the week. And then software absolutely killed this week, down 8.7%. Even on Friday, we didn't get back through Thursday's high. Closed at the high of the day, up 3.5% for the day, but you can barely see it. I'd have to zoom way out for you to see it just because of how much destruction took place in those software names. Back to back, highest volume ever, then almost highest volume ever on Thursday on that move down. And then we had the gap up and strong close on Friday. Hopefully that follows through because without software doesn't have to participate in the market for it to be like a risk on environment, but it can't just continue to die like this and the market just hold up okay. Before we get into the long and the short setups, we've got some earnings to cover and positioning. So we are still smack dab in the middle of earnings season. Make sure you know when the stocks that you own report, the stocks that you want to own report. Before the market opens, we have CLF, PGY, Monday.com, KD. Those are kind of the ones that I'm most familiar with. After the close, ON, Open Door. Those are the ones that I'll be watching most. I'm not going to go through this entire list. I like using Earning Whisper. I don't have any affiliation with them, but just a quick way to see the stocks that are reporting each day. Then we can switch over to the positioning. So we have updated NAIM and commitment of traders data. This one, NAIM, active investors exposure, their actual exposure, not a sentiment survey. Finally, we got some bearish positioning and the not leveraged long, but the relatively overbought positioning finally dropped from 92.5 down to 85, 7.5% drop, which is notable. It's still not at a level that we usually see corrections end at, under 60%, where if we take a look at April of 2025, that ended at 35%. And then we had such a clean uptrend for months and months and months of trading as positioning came back. Then during the most recent like corrective action, going from October 10th till now, we've stayed over 85% until this week, and we're still right at 85%. So still relatively elevated. I'm glad that it's coming down. I think it still needs to come down a little bit more before we get a clean trend to trade. But at least we're heading in the right direction. And then with the commitment of traders data, we're also heading in the right direction with the NASDAQ. We've got the purple line is the small speculators, green line is large speculators. The opposite of both of those combined is the red line. So I always just look at the red line and say, whatever the opposite of the red line is doing is what speculators are doing. So speculators are net long, but they are getting a little bit more neutral. And you can see that we've been extremely long the NASDAQ all in December, and we've been kind of stair-stepping back into that neutral territory, which again, overall is a positive. If positioning comes more neutral, that means that it can, there's going to be more potential buyers to get it back higher. But we're still net long, finally getting more neutral. Taking a look at the S&P 500 futures, positioning is smack dab neutral. Small speculators are long, large speculators are net short. So positioning between the two, exactly neutral. And then the Russell 2000 positioning is long, but getting a little bit more neutral. So both S&P or NASDAQ and the Russell 2000, their long positioning is getting more neutral. This is as of Tuesday's close as well. So we had a distribution day on Wednesday. We had a distribution day on Thursday. Big snapback on Friday, but on lower volume. So I'm hoping like some of these get a little bit more neutral as well. The positioning on NAIM is as of Wednesday's close. So we had one major distribution day of Thursday and then that snapback on Friday. So my guess is it's kind of maybe a little bit lower, maybe like around 82, 80, but we'll see again Thursday of next week. Getting into the long and the short setups. Okay, I did have Google on here. So the idea with Google, we had this nice snapback after the gap down on earnings. I still think it's the best like mega cap name in the market. Little bit of selling on Friday, even though the market was strong. Maybe that's just like, to me, I look at both of those days combined and I see this gap down, and from the open on Thursday, we're still higher. What I would be looking for here is not to buy it on strength, would be an undercut and reclaim of Friday's low and that 50-day moving average. You would also be getting back through the daily view app before putting the trade on. And then just have your stop at whatever the low of the day is on Monday. TSM, semiconductor name, making a new all-time closing high on Friday. Very, very strong action here. Would love just like a day or two of tightening right below highs, and then you could take that breakout into new highs from there. I wouldn't be chasing this if it just like goes on Monday with a gap up. That's like 2.5 days of straight up action. A day or two of tightening up, and then we can get going maybe like Wednesday, Thursday. AA, a metal and mining name that's actually holding up extremely well. We do have this overhead resistance gap, so I don't want to be buying into that. I would rather buy an undercut and reclaim. So a couple more days pulling back into the gap zone at this 56.40 level. Undercut and reclaim there would be buyable. I think if we get more distribution, the best spot is your first test of the 50-day moving average and this gap zone down here. But I have alerts at this area, and I would be willing to try it on the undercut and rally of this one. ENPH, we talked about this a little bit earlier, helping the TAN solar ETF continue to rally. Big move on earnings, up 38%. And this is a stock that has been completely ignored for a year, and for good reason. It's been going down, down, down. It's the last solar stock to finally put in the bottom. And on earnings, nice big pop up there. Some profit taking because we've got that overhead right here. And now kind of choppy action on Friday. Would be looking for an undercut and reclaim of the lows of this pullback, maybe the first test of the 5-day EMA as the buy point there, just because we do have the overhead supply. I did try this on day one, got situated at $50, then got stopped out the next day. So after taking a little stop there, now I want to see this come a little bit lower before I get involved again. So 5-day EMA, undercut of the previous lows, the pullback, that'd be the spot that I'd be watching for. Next up, we have IBRX. This one, definitely a performance boosting type trade. Individual biotechs, like if you're going to trade them, you got to trade them either like with normal position sizing, but you're taking off the entire trade by the end of the day or a majority of the trade by the end of the day, or with extremely small position sizing and you're just using it as a performance booster. I don't usually love to trade individual biotechs, but in a tougher market like this, I think they could be kind of cash flow trades. This one moved from $2 up to $8. And then I love the pullback to the 10-day, the bounce, pull back again under the 10-day, but a higher low price wise. And volume is just contracting. We had a nice close on Friday. Just looking for a breakthrough Friday's high, especially if we can like get a little gap down and then go back through that $6 range, back through Friday's high. That would be the buy spot for me with the stop at the 10-day EMA. NXT, another solar name, very, very strong action. It is a whippy type name, like it has large upper and lower wicks. So with that in mind, I don't want to be buying this on strength because we know it has that ability to pull back sharply. So instead of buying on strength, I want to buy it on something like this, a lower wick. So alert at the 10-day EMA, that's the spot. Undercut and reclaim of this top gap zone would be the buy spot with the stop at Thursday's low for NXT. Q, I think this was probably better bought on Monday. We had our first kind of pullback into the 20-day moving average, ugly close followed by a gap up, got through Thursday's high. That was probably the proper buy point. But we're right at $100, just through $100. You could even draw like a downtrend line there. Through $100 would be buyable. In a perfect world, we kind of come back into the 5 and the 10-day moving averages intraday. Then we recapture the daily view app. That could be your first kind of spot to get in. Then you add as it goes green or red to green, and then add through $100. It is an IPO name, so I will probably keep that position size a little bit lower. And that's why I would rather like kind of tier into a name like this instead of just putting on the entire position at $100. VIAV, nice pop on earnings. This was up 17%. Every close over the 5-day moving average. Yeah, a lot of volatility. The market's been volatile. No stock's not going to be volatile. But continue to close over the 5-day moving average. Now just looking for a retest of that high volume close on a market pullback under $25. That would be the buy spot with stop at the 10-day EMA for about 4% risk. Grail, another individual biotech that's been on a lot of people's radars. Tried to get going on the 22nd, followed it with a gap down, lower high. Then I do love this ugly close under the 50-day, followed by a gap up that reclaimed the 50, but we haven't really broken out just quite yet. So through Friday's high, stop at Friday's low would be the trade on this one. Treat it the same way, smaller position size. Try to get your stop to break even a little bit quicker. Individual biotechs, I don't like taking a ton of risk on them. Next up, we have ZIM. If we are in that 2022 playbook where we got oil and gas names very strong, steel names very strong, transportation very strong, ZIM made a nice move back then. Marine transportation, that was a theme that worked back in 2022. But the thing is, like, you have to buy those when they kind of look the ugliest. If you buy them on strength, they don't tend to work very well because they've got these like long lower wicks. So the gap down on Thursday, followed by an inside candle under the 50-day moving average, I think sets this up perfectly fine because I don't think this stock is going to be on anyone's radar, and that's when I want to buy stuff like this. Just through Friday's high, stop under Thursday's low would be the trade there. Once it gets back over the 50-day moving average, then people will start to look at it again. So that's why in a choppy market like what we're in, I try to get in at kind of like alternative entry points. So I have profit cushion into those key spots where everyone else will be looking at the trade. And if we do see volatile action around there, I can at least get like half my stop to break even and reduce the risk on the trade. Next up, we have PLAB. Really, really nice action on Friday, up 8.3%, right back into kind of the highs of this base. A quick pullback, test the 5-day moving average, recapture the daily VWAP. That would be the trade for me, kind of in the middle part of this daily range. If the market rolls over again, then we do have the gap zone 34.40 as a potential spot to watch. And I kind of think that would be even better if the market has like another wave lower and we just kind of pull back, letting this 50-day moving average catch up. That would be a spot that I would look to be a little bit more aggressive. It still does trade only $40 million a day, so sizing can't be ridiculous with something like this. But this is a name that's been showing great relative strength recently. So first trade idea, just weakness on Monday that recaptures the daily VWAP within this range, then stop is at that low. If the market continues to pull back and we can get a test of that gap zone, that's the secondary spot. SHLS, another, I believe this is a solar name. Doesn't show a solar, but very choppy action here. So again, when you see a stock that has choppy action like this, your mind shouldn't tell you to buy it on strength. If you're buying choppy names on strength, chances are you're going to get stopped out if you're using a tight stop, which I like to do. So for me, we're bumping into this resistance gap. We haven't closed above it. Market had a snapback rally Friday. We still couldn't manage to close above it, even though we had a nice day, up 6.6%. What I would be looking for is a pullback into the gap zone, into the 20-day moving average at this 965 spot. Probably not something for Monday or even Tuesday, but if the market pulls back again, that's the spot that I'd look to be more aggressive. If we get like another like day or two tightening up just below this pivot, then maybe you could buy it on strength, but I still would not rather buy a name that has this type of volatility on strength. Then we get to the short setups. First one, we got SNDK. This one to a lot of people looks, and to me, like objectively, just looks like a nice little bull flag pulling back into the 10-day moving average. We had an inside candle on Friday. If you want to say, hey, buy it through Friday's high, stop at Friday's low, that's a nicely defined risk trade. I would not be mad at that at all. It would stop me out of my short, which is fine. You're wrong on trades all the time. I've already taken enough profit where it's going to be a winning trade. But I think like after Friday, like you see this all the time after big distribution days and then one day of a pop, everyone is just bullish again. And when you have a quality setup like this, like just a pullback to the 10-day, this is the first name that people are going to try to buy, at least in my eyes. And if we don't get bullish price action on Monday, say we get a gap down on Monday, I think people are going to start to dump this in a real way down to the 20-day EMA. So I would be looking for a gap down on Monday and then a loss of Friday's low as a potential short spot. If this breaks to the upside, I'm not trying to like short it on strength. I only want to short this on weakness because to me, this got extended. It was our second like weekly extension and our first unfilled gap down while the market started to weaken. If this rips higher, like I am going to get stopped out and that will be fine. But I think a lot of people just think this is going right back to highs. So if we open weak on Monday and then lose Friday's low, I think you're going to see some real distribution here, at least down to the 20-day. So that's the trade idea there. Carvana, really nice short cover of half the short position on Thursday. Nice gap up, uppercut and fail at that resistance gap, the 10-day moving average. This does have earnings. When is this? The 18th. So not this week, but not upcoming week, but the following one. If we could get situated on like a rally into the 20-day or the 50-day moving average and then some failure, and we could have weakness going into earnings, then you could hold into that earnings call. But I would be watching this 20-day EMA, let it rally back through that area, and then a loss to the daily VWAP on that rally day would be the short. Stop above the 50-day simple moving average. CLS, this is one that I've been watching for a short, still have never triggered it. Feels like a late stage base to me, like multi-year run from $8 up to $350. Failed right at that resistance gap, then gap down on earnings. We did bounce at the support gap, so we don't want to chase a short lower. Never do that. Nice reaction on Thursday, gap up on Friday, but a weak closing range under the 50-day moving average while everything else closed relatively strong. So what I would be looking for here after a key test or a test of a key area, a gap down opening range break where we lose Friday's low. That would be the short for me with a stop just above the 50-day moving average. CRDO, semiconductor name that had this broadening pattern that eventually put in a lower high. We lost the 50-day moving average, then we lost the 200-day. Now we're bouncing back up and would look for a rally back through the 200-day into the overhead resistance gap here at 123.50 or so. We've seen this with a DoorDash, with an MSTR, with Spotify and Netflix, is you rally back up, you break down, you start the downtrend, you rally back up into the 200-day moving average, and then a gap down under the 200-day is what killed all those stocks. So looking for a rally back into the 200-day, maybe a little bit above it, and then a gap down opening range break to the downside. When you lose the 200-day again, that's the short entry. Stop, I would use like 3 or 4%. ARKK, kind of the same idea. There's just a lot of trash in this ETF, and we see the trash getting taken out over the last 2 weeks. Now we have 1 day of a bounce. We'll probably have, realistically, like a day or two more of this bounce at least, where I want to see it rally back into the declining 10-day moving average and the gap zone. For me, I'd be looking more at like an uppercut and failure of Thursday's high as a potential short. But just make sure that you're on the right side of the daily view app. So let price come in, let it rally. And then as momentum is faded and we lose the daily view app, that would be the short there. Stop above the 200-day moving average. QUBT, the weakest of the quantum names, big washout on Thursday, down 14%. Gap and go on Friday, up, what was this? It's like 21% almost. Rejected at the 10-day and the resistance gap so far. I think it's probably going to get through that area pretty easily if the market doesn't just like fall apart on Monday. So let it rally through $10 and then at the 20-day moving average, right around like the previous support area here at 10.25. That's the spot that I'd be looking for weakness to come in. But just like with ARKK, wait for the weakness to actually show up. Don't anticipate like the 10-day being the top, $10 being the top, the 20-day EMA is kind of a random spot. Wait for weakness to come in because I think this could easily run to the 50-day moving average before finding that weakness. So wait for a loss of the daily view app before shorting, and then keep your stop at the high of the day. Because if this is actually going to just like roll right back over again, you're going to stay under the daily view app. So you don't need to give it too much risk there. And then we got Dave, software stock that broke this late stage base to the downside, now rallying back up into declining moving averages. Same idea. Let it rally a little bit more because Friday was really strong action, up 17.5%. Let it rally more back through the gap zone here at 190. The higher, the better. But something that I'd be watching for first at this gap zone, secondary at the 50-day moving average, declining 50-day, and $200 as the spot there. And that's going to be the weekly prep video for the week of February 9th to the 13th. If you guys enjoyed it, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. I hope you have a great weekend, and I'll see you guys in Monday's video. Take care.